it was a way down the list, is all of them had set up an actual trade opportunity this morning, every single one of them. So this is IPA. It went from $6.80. We got up to a high price of $7.40. That's a 50-cent profit, just under 10%. Back down to a break even, and then it rotated straight back into a buy trade, but the volume was still gone at that stage. So you're still working this, and then all of a sudden, because this is a surprise, the lack of volume, it's almost as if people weren't aware that this was going to be kicking off at some stage today. And this is why I was paying attention to this one. Usually when you see a cat, the open has huge volumes. And when the open hits and it doesn't have huge volumes, you're starting to wonder, does anybody know about this? Well, of course, somebody must know about it because it gapped up from the overnight session from a way down here at $5. So you can see that that volume, whilst it's big, it's not as meaty as one would have expected. And then obviously what happened is it had been up as high as $10 earlier on today, and it pulled back a half-back trade level at $7. So I quite liked the opportunity perhaps to buy up some IPA, and sure enough, it's went from $7 up to a high price of $9. So that's worked out quite nicely. Let's take a look at the cat number one IGC. Cat number one IGC was a buy trade and a scratch, and then a buy trade and a scratch. This went from a $4 level to $4.40, 10% on the first swing and then a scratch, and then 10% on the second swing and then a scratch. It's never been back above, so that's IGC finished, which opened the door to move on to some of the other ones. Neuro was not a trade. Neuro never gave us a trade because it's a cat for the second day in a row, and for that reason it just found profit takers. Literally from the gun, there's exactly what I'm talking about. Literally from the gun, it just found profit takers, and it drove the price down on that one. So that's never going to be a trade, right? It's never going to be a trade. Let's take a look at PRFX, another profitable trade for us. PRFX, you can see the opening trade went down, and then it went straight back up within a couple of minutes into a buy trade at $4.80. $4.80 drove up to $7.80 for a $3 profit, which is nearly 75% return on your money on that trade. $4.80. $4.80 to $7.80. It's a pretty good trade, isn't it? Pretty good, solid trade. Now, it's reversed out. The volume started to decline, and it was obviously very, very gappy. And then all of a sudden, you got this gap down. So if you hadn't taken any profits on the spike, my God, you've just been crying into your soup here, because it's just dropped right back out again from that point onwards. And I think with a gap down like that and the lack of volumes, you're just going to let this one disappear into nothingness. SQBG was cat number 4. Another profitable trade opportunity, SQBG. So this was a buy trade again at the open at $12.40, rallied up to $14.40 for a profit of $2 on a $12 stock. That's not bad, 20%. It'll do, donkey. There was 2 trades. It did spike higher, gave a quick profit, and then it scratched you out at +1. And then it gave you a second spike higher off of that trade there. And again, another trade, but obviously the pullback here, the volume collapsing off the trades suggests to me that it's a done deal. And then, as I said, the one trade that's been kicking on from that point is IPA, cat number 5. And this is what IPA's been doing since the cash open. As I said, there was the lack of volume that was actually surprising at the open. And then somebody took an interest in this bad boy. Look at that rip higher, guys. And that opportunity then gave you a real nice read on this. And if it stays above this, this is one of those ones that you hold. You could hold this for 24 hours, potential into tomorrow as well. But anyway, you've just seen a trade off of $6.80, high print price of $9.80, $3 profit almost on a $6 trade, $7 trade. So just under 50% return on your money on that little stock there. Immunoprecise antibodies. Immunoprecise antibodies, guys. What a company name. They must have sat down and thought, what should we call the company? I know. Immunoprecise Antibodies Limited. That's got a ring about it, hasn't it? It's like Coca-Cola. It's got a ring about it. Anyway, so there's the drive. There's the kind of directional drive that you got from this, and you can see see how the trade set up from that little balance area there. And you can see obviously in terms of targets, which it works exactly the same way as every other chart. In terms of targets, you can see where your target price was on this. You can see it's just into that current target price right there. And obviously when it comes with a big surge in volumes, you want to just make sure you lock away some cash. Lock away some cash. Yeah, Paul, I think they're trying to get that one through the .com, you know, with that kind of name. I mean, it's so catchy. You'd imagine it must have cost them $1.99 or something like that. Must have cost them $1.99 to get that through the GoDaddy website. What are we going to call our company? Immunoprecise Antibodies Limited.com. Brilliant. Genius. Anyway, buy side Nasdaq S&P spread is one of the ones that we called earlier. That's gone on to do some pretty impressive stuff. I haven't been selling it. I'm not interested in selling it anytime soon. That's been a good trade. Good. It's been a good trade, guys. Very good trade. And that's obviously offset that sell bond trade from earlier. It didn't develop, and obviously when we started to see the 10-year driving in terms of the fly, you're probably thinking to yourself, damn it, somebody's buying a flattener, right? Somebody's buying a flattener. So you started to see that somebody buying a flattener, because with the 10 spread selling, the curve didn't drop. In terms of positive correlations, the curve didn't drop. Of course, it didn't rally in terms of a yield correlation. And that gave you a storyline, didn't it? Aye, it did. That's what I was teaching yesterday, in case you hadn't noticed. That's the story that we wanted to see. This is the point. So obviously your job now was to try and figure out, what the hell do I do with this? Well, you'd already seen the Q's S&P going. You'd already seen that. You'd already seen everything else lining up. And sure enough, that was a trade. You recall in yesterday's classroom, we talked about the 5s, the 10s, or the curve itself. We talked about how the accumulation starts to show up on something. And the way accumulation shows up on anything is like this. If I'm accumulating a flattener or a steepener, it should start showing up like this, shouldn't it, as we develop into that storyline. If that's what you're accumulating, whatever this is doing, the interesting thing is this is made up of other things. It's made up of two different markets, not just a single market. Obviously, if it's a single market, what is it that's accumulating? You can see the accumulation. But if I now say to you guys that if this is being accumulated, what does the other market look like? What does the other market look like? The other market looks like this, right? Potentially, the other market looks like this. Yes? Now, obviously, it's easier to see. I shouldn't have drawn these as lower lows, but I was maybe, it's maybe better if I actually just change that storyline a little bit so that it kind of makes a bit more sense on the accumulation side from what you're seeing. Okay, now it will maybe make a little bit more sense about what I was drawing. So if this is the market that causes that accumulation on the orange line, assuming you're accumulating the orange line for whatever reason, this is what it may look like on an accumulation, right? This is what we showed you yesterday, yes? No? Does everybody agree that that's what I showed you yesterday in classroom? This being twos, tens, and this being the tens flies. So when you're looking at that idea, you're saying, wait a second, this twos, tens is under accumulation. Whether it's a positive correlation or a negative to bonds, it doesn't make any difference. Assuming it is a curve we're looking at, then what you're saying is that the steepener, what you're telling me is that the steepener is under accumulation during that process. So if the steepener is under accumulation, that's going to be a story we can lean against. We can say, well, if the steepener is under accumulation, I should be able to make money by selling bonds. If a flattener is under accumulation, I should be able to make money by buying bonds. It doesn't matter where the bond is at that stage. It doesn't matter where the bond is. We can still make money by taking advantage of what we can see. So when I look at the bond itself, when I look at the bond here, one of the things you'll be able to recognize is you'll be able to recognize the 10 flies driving down. Unfortunately, I've done it the different colors in the exact opposite order, so it's fantastic to think about. But you see the basic idea here. You'll see that the curve there seems to be under accumulation because the fly is doing this, doesn't it? The fly is doing that. So when you're seeing that, you're saying, wait a second, this black line, this curve trade is under accumulation for a flattener. They seem to be accumulating a flattener for bonds, which is bullish bonds. I should stop selling bonds because there was a bond short from earlier. But when that starts making lower lows and the curve is not interested, you say, wait a second, that's exactly right. Just the same way as at the top edge here, you start seeing it changing. You can see the divergence creeping in on the first little change there. You see that little change there starting to happen there, and you say, wait a second, this curve is under accumulation for a, yeah, you see it? This curve is under accumulation for a flat steepener. And if the curve is under accumulation for a steepener, as it develops out here, you say, well, wait a second, that's something that I can perhaps lean against. I can start watching for possible trade opportunities if we know that that's what's happening. Just the same way as if we know that this is what's happening here, we might have an opportunity to get away from a short bond into a long bond position for that flattener that develops on the black line. This is exactly what we showed you yesterday when we looked at the big picture on this chart and we says, what is the big picture telling us in terms of macros? If we take you out into, say, a 15-minute chart here, you'll see what the big picture was telling us, and it's been in the play all ever since. You see that idea there. You can see the orange line is most definitely a lot higher than the shape of the black line, which is a lot lower. So that tells us that the curve is under accumulation for a flattener. In the black line, a steepener in reality, because it's a positive correlation we've got here on the bond market. So we can see that that changed at the bottom edge here. You can see that this, it wasn't brilliant, but it definitely was changing enough that it was visible. There was a very definite change coming into the bottom print there. And as a result, you can say, well, wait a second, I think that's going to flip the curve around, which it did. And then as we go back into the lower time frames to see what was happening at the top edges, we're looking for that accumulation phase into the top edge to change around. Because remember, as it changes from 2s, 10s to 10s, 30s, the curve changes because the 2s, 10s is going to diverge. The ZN is going to diverge as part of a 10s, 30s trade. It's going to do the exact opposite on a 10s, 30s trade, isn't it? If it's going to drive higher on a 2s, 10s, it's going to diverge on a 10s, 30s. So when we are looking at the trade as a possible 10s, 30s, we have to be aware of the fact that there might be an opportunity. So I know it's a little bit complicated, but then we never said that bonds wasn't a little bit complicated. That's why most people are better avoiding bonds until they've been able to trade everything else. A lot of moving pieces on bonds.